Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius. Today is the 24th of May, 2023, guys. So yeah, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look and easy approach to the markets. Yep, we'll have a look at the charts just to see what's happening, how we can position ourselves for this day. But yeah, guys, or maybe tomorrow as well. Why not? But yeah, before we go further, we need to quickly have a read through our risk disclaimer. So, yep, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest and we can continue. Okay, guys, I hope you can see me and hear me well. I think I'm having a few issues with my with my computer. It seems like it's jumping around a little bit. My the video quality is a little bit, I think, lagging. Let me just see if I can do something about this, but probably not. But okay. Yeah, okay, guys. Right, hopefully this somehow stabilizes a little bit because, again, I think it's going to be a little bit lagging. So apologies for that. Hopefully, like I said, the computer will calm down a little bit because, again, I think my graphics card is just a little bit on the weird side today. But, okay, look, so far it seems okay. But anyway, right. Before also jumping into the charts, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. And yeah, guys, if you have any questions, you can always reach out to us. That's all fine, So anyway, let's jump into the charts. So the first one I want to pick up here is Nikkei 225, and we saw this nice little decline. I talked about this, and I said I mentioned this little possible correction which we could get, and also I mentioned this highlighted zone right here. The highlighted territory between the 30,663 and 720 levels. Now, I said to you that if this provides good support, we might see something like this, like a rebound and a push back up. Now, at the moment, we're seeing a bit of a further decline. And to be honest, I think that Nikkei seems to be more reflective of what's happening in the US rather than, let's say, economic data. Because if I'm not mistaken, yep, the Japan Tankan index came out. Yep, that was on the better side. I think there were some good numbers in there. Yep, it shifted from negative territory into positive by quite a lot. So this is the sentiment index for manufacturers in Japan. And that one kind of jumped from previous -3 to +6. I mean, that's quite a spectacular jump, I would say. However, that's not really something that affecting the Nikkei 225 here. Again, maybe it's having its effect, but we're just not seeing it because basically maybe it could slide even further south. Maybe that positivity is helping this index to stay afloat. So again, we'll have to wait for now. From the technical perspective, I'm keeping an eye on this highlighted territory. If we drop below it, as I said yesterday, I will go lower towards that 23.6% retracement on the Fibonacci, drawn from the lowest point of March to the current lowest to the current highest point of May. So yeah, I'll aim for that 23.6, and then we'll kind of go from there. But only if we do drop and stay below this highlighted territory. In terms of the upside, well, if we somehow remain above this highlighted zone, yes, there is a good chance we could see a nice push back to the upside. By the way, I just want to double check something, because I had a bit of lagging moment here with my system. So I want to just put this in the chat room just to see if everything's working okay. Just bear with me one moment. Hopefully this is coming through straight away without any lag. So I'm just saying good morning to everybody, to everyone who's tuning in right now. If you can leave some sort of like a comment or something like in there, so that I would know that we are, running nicely and smoothly, and you can hear me clearly. So yeah, and the video quality is coming through okay, because again, it was in the beginning a bit of a jumpy session. Anyway, so coming back to ASX 200, guys, looking at the picture here, look, I mean, beautiful move to the downside, and in general, beautiful decline here, and we continue to trade in between these two trend lines. And look, I'm going to stick to the same game plan. I've mentioned this before. I'm going to wait until we get a clearance of one of the sides in order to get, in order to consider the next short-term directional move. Until then, I'm just observing the price action here. To be honest, I have nothing else to say here about this one. I talked about this already several times, so that's why I would rather just, stick to my game plan and wait. China's 50 index. So the FTSE China 50 index. Look, beautiful performance, because again, I talked about this idea of a range. The only issue that I have here is the fact that we're breaking the lower side of the range right now, but can we stay below it? Now that's a good question, because if we fail to stay, we're just gonna have ourselves a nice little false breakout, and then we could see a reversal back to the upside. Now, in terms of the target for the downside, well, this is the area that I have in mind. Let me just adjust this very quickly. This is the area that I have in mind. The why it's not showing any price? Let me just adjust this. There we go. So 12,595 territory, approximately around here. That's near the high of the 16th of November and near the low of the 3rd of December. So in a way, good potential target, but of course, ideally somewhere here could be, that better target. But hey, let's not rush into anything, guys. For now, let's keep an eye on this. Yes, I'm bearish on this index, but I want to see if we're gonna stay below this lower side of the range or not. Because again, if we don't, then it's just a nice little false breakout. Nasdaq 100. So, okay, look, today we have the FOMC minutes, right? So the minutes from the previous FOMC meeting. Okay, everybody will be watching that. I mean, we could see a bit of volatility. I mean, I don't know if something else will be, something shocking or something like, something that we will find out new. But in general, such meetings, tend to kind of bring a bit of volatility, if it's lacking. So just kind of be careful and cautious about that. If you're trading the US indices, or for example, something related to the dollar or gold, then yeah, we might see a bit of fluctuation. So just kind of keep that in mind. But here, from the technical perspective, look, I talked about this yesterday, and I said that in order for me to go further north, I need to see a push with the 13,960. Yesterday, the index, all the US indices fell. Not much, but just by a little bit, by a percentage or something. I think the Nasdaq was the which one was it? I think Nasdaq and the S&P were the ones that lost the most. Yeah, around 1.26 and 1.12 respectively. But Dow was the least loser from the top three. So look, in general, not everything is lost here for the bulls. Now we're seeing this kind of move lower because, again, yesterday it seemed like that they cannot reach an agreement. But look, I've talked about this last week and in the beginning of this week. I said to you, prepare yourself for a show. Honestly, prepare yourselves for a show. It will be like it could be a roller coaster ride. Maybe even it could. Now I'm just the way I'm kind of thinking, because I'm constantly adjusting this to the news that are coming out every day. Look, we could even see maybe a bit of a retracement, because in a way, if the logic is this, that they will reach a deal, and that's when the market will, rally, and that's when we'll see another push to the upside. So maybe a bit of a retracement right now could be possible. So just maybe an idea. Let's wait and see. This idea is supported kind of by this. Let me just put this. There we go. As you can see here, the probability for a 25 basis points during the 14th of June FOMC meeting is now getting higher. Now, this is what I was talking about from the last meeting which we had in May. And look, I said to you that, although we were sitting at 99% for a no rate hike, I said to you, wait, we still have a full month to go through. We still have some news to come out, different, okay, debt ceiling, not debt ceiling. We'll have the job numbers as well, inflation numbers. By the way, we got the inflation numbers from UK. I'll get that in a bit. So, yeah, look, I mean, that's why this could still even out. It could still be around 50%, somewhere around here. Look, for now, the only thing we can do is try to position ourselves carefully, because we are traders. We try to be careful. We try to manage our risk carefully, and that's kind of the ultimate goal. Everything what's happening, yes, you have to take into consideration, but in general, at the end of the day, we all need to kind of position ourselves carefully. So in this case, looking at Nasdaq 100, what I'm considering right now, given the current activity, maybe a bit more retracement here could be possible. Maybe a test of that 50% retracement on the Fibonacci, which is drawn, by the way, from the highest point of November of 2021 all the way to the lowest point of October of 2022. So we have already retraced that 50%. I'm kind of aiming for that 61.8%, but actually for that I would need to see a push somewhere above that 13,960 territory, or in a way that for a psychological 14,000 mark. So yeah, be wary of that. So at the moment, we're getting closer to this upside line as well, to this 50% retracement on the Fibonacci. Let's see if this area provides good support. If it does, great. Maybe a rebound back up could be possible. But either way, now at this point, I'm just keeping an eye on that 13,960. That's from where I will go higher. At this point, we're seeing a bit of a retracement, so also keeping an eye on this upside line. If that gets broken, guys, that may be the cue for more sellers to step in and drag this one a little bit lower. Dow Jones Industrial Average, so yeah, similar story, but we're stuck in a little bit of a range. Or some of you might say, but hey, Darius, maybe this is actually more of a descending triangle pattern. Well, look, you're not going to be wrong here as well. It's the only problem I have with this formation is that it's not ideal. In general, nothing is ideal, but look, even if it is a range, even if it is a descending triangle, either way, a breakthrough one of the sides here is required. So if it's a descending triangle, a breakthrough the lower side of it is needed. If it's a range, yes, a breakthrough the lower side of it is required. So either way, a drop below that 33,000 territory for me, that's where I will get a little bit more comfortable with some lower levels, guys. For the upside, well, the further we go to the right here, the lower we go, the more I'm kind of I'm going to put more emphasis on this downside line. So if we clear it, great, I'll get a little bit more excited with the upside. The German index, beautiful retracement. Honestly, look at this magnificent thing. It broke the upper side of the range where it was stuck in for about a month or something like that. I was very happy. Finally, we got the move. We got a test of my levels. Then I've marked a new one, the 16,375, let's say. That's the nearly current highest point of May. So in order for me to go further north, I need to see a push above that territory. Now, also an idea that I ran by you is that, look, we had a good rally in a way. Maybe it's time for a bit of a retracement. Why? Because maybe everybody's looking here at a possibility for a double top here. As you can see, we've tested this the previous all-time highs, and now can we get that double top? Now my question is, as you can see here, I don't know if you can see it actually, but this month's candle looks like a beautiful doji. So according to all the TA rules, such patterns tend to, not a pattern, but such candle formations could signal a reversal. Now, will that be the case? If you want to consider that, that's great, because look, what could happen, for example, okay, if we close this month like this in a doji style, with a doji style candle, okay, everybody will start jumping into into selling. Everybody will be very, very happy, but then we have a move. For example, a sharp move to the upside, but then at the, going into the second half of June, that starts reversing sharply back down. So basically, we have these situations where, you think that it's actually giving you like a potential reversal signal, but then actually you see an opposite thing happening very quickly. That's the point where, everybody gets taken out. So you're kind of right, but you're maybe a little bit too early into the game. However, if you can afford to go in early, that means you have to have a nice, wide stop loss, just in case you have a spectacular move, against you, and that could take you out. So you need to kind of take that into consideration, or try to position yourself, or try to find that moment, where you can maybe capture the peak, or at least closer to the peak, and then, move, back down in this case. So long story short, on the German index, yes, for now we're drifting back down. We're testing that 16,063 territory. I spoke about that level. For now, I'm watching if this is going to provide good support or not. If not, then yes, we will move back inside the range here. We might fall back below the 16,000 mark, and then yes, we could start considering my downside scenario level here, which is that 15,800 territory, and also the 15,700 zone. But let's not talk about that yet. Let's first figure out what we're going to do with that 16,063 territory. The US dollar index. Okay, look, yesterday we had a good push. Okay, we tested the 200-day EMA again, so that's fine. I said to you that, look, in general, I'm gonna stick to a bit of I'll take a neutral side for now, because what I would like to see here for the upside is a push above somewhere above this 103.55 territory, which is where our 200-day EMA here on my daily chart is. For the downside, I would like to see a drop somewhere below this 102.75 at least, and then consider maybe a move lower. At this point, I'm just observing the price action here. Yes, in a way, it looks still a little bit more positive than negative, but we have to wait. I would say we have to wait here, and we have to just kind of, wait for that confirmation breakout. Because again, we had a tease yesterday here, and we then drifted back to the downside. If we do eventually break this territory, great. I will go higher. At this point, I am just observing the price action. Gold, guys. Gold, beautiful move. Also, you look at this choppy session, guys, and I think that it might stay like this. Maybe actually today we could see another decline. So look, I talked about this and I said that as long as we stay below this downside line, there is still potential for the downside. This thing here, I think it requires to be marked. Now, I think that I will recycle these lines here. Actually, no, apart from this one, I will just reuse this, recycle this, always recycle, guys. So what I'm loving here about this level, this 1977 territory, although yes, it was violated a few times, that's absolutely fine, but we continue to somehow kind of oscillate around it. So at this point, look, we're getting hold up near this downside lines. That's fine. We're getting hold up below this 50-day EMA as well. So what we need here in order to go higher is a break of this downside line and a push up of the 50-day EMA. This way, potentially more buyers could join in. Also, we'll keep an eye on the dollar index here. If somehow USD DXY here pushes to the upside, gold could retrace back down. So basically, in other words, this idea of still holding below this downside line and below the 50-day EMA could be playing out nicely. So just kind of keep that in mind, guys, because I'm not getting rid of the downside scenario yet, because in general I'm targeting that area near that 1950 level. And maybe ideally, I would like to see maybe a drift further south. Why? Because I would like to see a test of this upside line here, taken from the low of the 3rd of November. Well, talk about me being biased here. This is something that I want. But to be honest, unfortunately, what I want, the market doesn't always give me. So yeah, just have to kind of position myself accordingly. Long story short, for now, I would say this way, that as long as we stay below this downside line and below that 50-day EMA, I will continue targeting the downside. But if suddenly we break this downside line and stay above the 50-day EMA, congratulations, potentially more buyers could join in. Silver, just a quick update on that one. So we broke the hurdle here. I talked about this. We moved lower, but we didn't really reach the 200-day EMA, but that's fine. That's fine. Still, we're below the highlighted territory, my highlighted zone right here. If we continue to trade below, then yes, I will go further south towards the 200-day EMA, or maybe that 22.82 territory right here. For the upside, now this is where my idea of patterns like that, and I'll just explain you in a bit, where my idea kind of comes in nicely with the upside scenario. So basically, I've mentioned this already before in my previous videos. Whenever we had patterns like that, whenever we have a sharp decline like this, for example, the first one, right? Now, what I've noticed, and this is only me, guys, don't stick to my, crazy theories or anything. No, just I'm sharing with you what I've seen, what I've experienced in the past, and basically what I'm saying here is that, look, whenever we have a sharp decline like that, and then a gradual one after that. Now, normally, I think if my memory is still clear, if I remember clearly everything, the textbooks tend to tell you that if we start sliding, then after like a decline like that, if we start sliding then like this in a gradual fashion here, and within maybe something like a falling channel or something like that, we What can I say here? Yes, we could still drift a little bit lower here, but eventually a breakout could happen. Now, another thing is that when the breakout through the upper side, I'm talking about the upside. Sorry, I mean I had to kind of mention this in the beginning. A breakout to the upside could happen, but again, in order to consider some higher levels, still that breakout is required. You cannot, let's say, start entering somewhere here and hoping that maybe, this theory, maybe it will work out and then it will go, to the upside. I'll capture just a little bit of extra. No, don't think this way. Never think that, don't be greedy. Kind of always leave something for the other guy, other person. For now, because this could still drift lower, it still could end up testing the lower side here of this falling channel, and maybe even it could end up testing this 200-day EMA. Who knows? So that's why I'm saying don't rush. But in general, what I've noticed is that we get this nice kind of rebound breakout here. The only thing is that don't expect a huge, for example, breakout if it happens. Because here we have EMAs, and this is what I've noticed as well. Whenever we have like something like this forming in between the EMAs, then for example, let's say it does break out to the upside, we go and we test, let's say in this case, we go and test the 50-day EMA, we find good support, and then we drift back down. So something like that. So we have seen something like this happening several times. That's why I'm running this by you, and just to, let's say, complicate your life a little bit more, because that's my job. Anyway, guys, look, for now, the long story short for now is that I'm still cautiously leaning towards the downside as long as we stay below the 23.52 territory, somewhere around here. We'll aim for the area near the 200-day EMA, and we'll go from there, basically. Now, oil, there we go. Oil, look, I talked about this, and I said to wait for this one, guys, because again, it might, maybe it's forming a nice ascending triangle. Who knows? Maybe it's forming something else, but for now, I'm looking at it from the ascending triangle perspective. And also, if I'm not mistaken, where's that news? That there was some news from Saudi Arabia that they're basically planning some OPEC plus production cuts, and that pushed oil back to the $74 mark. Okay. Look, I'll stick to my technicals for now, because again, the fundamentals seem to support my technicals, so that's great. I'm quite happy about this, and but I'm not bullish on this yet, because what I need here is I need to see a nice good strong push above that 74 territory in order to go higher, initially aiming for that 100-day EMA, and then if that gets cleared, to aiming for that 200-day EMA. But slowly, guys, we're not going to rush into anything. For now, I'm observing this. Look, it still could drift back down. It could still, bounce around here somewhere. While it's in the pattern, it could still, move in between these two lines. However, for the downside, a break of this lower side of the ascending triangle pattern or this upside line would be required. Simple as that. Now let's jump into Bitcoin. So after a good rally yesterday, I wouldn't say a rally, but a good performance yesterday, Bitcoin did reverse back down, and I talked about this. That's why I said to you that my upside scenario will come on a break of this downside line. But for now, the 50-day EMA is providing fantastic resistance. We're drifting back down. The question is now, can we see a drop below the 26,550 territory? If we can drop below that, and we can also drop below the 100-day EMA here, shown as the green line here on my chart, that's where it could open the door towards the 200-day EMA, or these levels around here, the 25,367, 255 level, approximately around here, guys. But yeah, that's the simple game plan for Bitcoin. And also keep your eyes on the on DXY, of course, what's happening there. The Litecoin drifting nicely to the downside. Look, I've talked about this previously, and in the beginning of this week, I said that in a way, if we do drop lower, but we stay above the 50 and the 100-day EMAs, then yes, I will consider something like this, like a rebound and a push back up. What we're seeing right now is a break below the 50 and the 100-day EMA. Now, I had said before that, look, I'm going to start looking at some lower levels if we do get a drop below it. However, additionally to that, I would like to see the body of the daily candle staying below that. If it does, then yes, I will start looking at some lower levels. But if it doesn't, it will just give us a false breakout, and potentially, you know, this may attract the buyers back into the game. So let's wait and see. At the moment, if we draw a Fibonacci retracement here, you'll see that we are kind of testing that 38.2% retracement on the Fibonacci on the Litecoin here. So look, even if we do continue to trade below this area, yep, my next target is the 50% retracement near the 200-day EMA. Not far. Not exactly there, but not far. Okay, let's jump into a few pairs, guys. AUDJPY. We're seeing a decline, and we're seeing a break below one of my levels here, the 91.32. Look, the negativity here is coming in from the whole kind of debt ceiling saga, you know, that they're not going to reach a deal. There's a kind of what's the word? I forgot the word. But basically, they're not going to reach a deal. That's what I'm basically trying to say. That default. There we go. That's the word. Everybody's expecting, you know, hoping for that maybe. But look, in a way, there's a way too big of a price for a default. You know, unless it's what they're going to do here is just going to, let's say, oh well, most likely what they're going to do is they're going to drag all the way towards that 1st of June. Maybe like they will extend, you know, this idea, the negotiations and stuff like that. But in general, if we look at it from the other perspective, we have kind of reached that problem already in the beginning of this year. So I don't know. It's just that whatever they decided to, you know, to kind of call it, to talk about it right now, that's where, you know, it's kind of a little bit weird, I would say. Anyway. All politics is weird in general, so there's no logic in there. But at the moment, look, we can only try to adjust. We can only try to position ourselves correctly, carefully, and, you know, have a proper risk management in place. So at this point, look, what I said to you before when I was covering this, I said to you, if we do drop below that 91.32 territory, I will go lower, initially targeting the 200 EMA and then the 100 and the 50-day EMAs. If we clear those, okay, great, I'll go towards the lower side of this range. Oh, sorry, not range, rising channel. In terms of the upside, I have a very conservative approach, and I would like to see a push above the 92.42 territory in order to go higher. So now NZD pairs. The first one I want to pick up here is one of my favorite one, and AUDNZD. I have talked about this previously, but look, we have to kind of start a new, fresh look analysis on it, because we did get the RBNZ, and as I've mentioned in my heading here, that RBNZ is unstoppable. Yeah, I mean, the interest rate, they've pushed it up by another 25 basis points, but we're seeing some weakness in NZD. I think that maybe the market was kind of already pricing that in, so maybe everybody's kind of hoping maybe we'll see a bigger one, but yeah. I think the market was already pricing in the 25 basis point increase. So yeah, the question now is how we can position ourselves correctly here. So look, in general, the RBNZ interest rate here is now at 5.5, right? Their inflation is at 6.7, so we're kind of getting closer to numbers, you know. It's not like EU numbers, but where we still have a wide gap there, but with New Zealand, like, yeah, these guys are just increasing, but they're justifying that there's still a lot of demand for, for goods. The labor market is still expanding, and as you know, and as I've mentioned before as well, in situations like these, central banks they don't really want, although they keep saying, I think that they have to keep on saying that they want progress, they want better working conditions for everybody. No, it's like it's all about numbers, statistics. We need to control inflation and stuff like that. And if the cost is to kind of force some people out of work, it's called, well, let it be in that case. It's for the greater good, right? It's just that if you're on the greater good side, you're thinking, yes, that's correct. If you're on the side of the losing the job, that's not good. So it's always a constant battle like that. So unfortunately, I don't know if there is a right or wrong reason, but these are the typical moves in the in the economy, in the monetary policy that everybody takes, and in order to kind of maintain inflation in the market economy. Anyway, beautiful rebound on AUDNZD and a push to the upside, rebounding from this 1.0560 territory, approximately around there. And look at the fantastic, spectacular move we had. We had a move all the way to the 50-day EMA. I mean, let me just see what we have here. Where's that? There we go, price range. So, yeah, we have a nice good move here of about what 100 pips, 150 pips at least, 160 pips. So yeah, around 1.5 increase, percent increase that we had already. So wow, that's quite a spectacular move here, and quite a spectacular devaluation of the New Zealand dollar against some of its major counterparts, in particular here Australian dollar. So now what's next? Well, in this case, let me get rid of this. For now, from the shorter term perspective, what I'm going to do here is I'm going to monitor some of these trend lines. Now, all of them are tentative, don't get me wrong, because they're still kind of, we don't really, they're not really picture perfect, but one of these trend lines is actually this one that I'm interested, the one that's taken from the high of the 2nd of May. We've tested that. We tested together with that. We tested the 50-day EMA. So if you're looking for some higher levels, a break of this territory is required. So that's why I'm not going to have any levels, particular levels for now. I'm just going to stick to, why is it like that? There we go. There we go. Where's my arrow? Yeah, there we go. So for now, I'm just going to stick to this, and I'm going to stick to the EMAs. If we do push above that 50-day EMA, great. I'll aim for the 100 and the 200-day EMA. If we do drop, let's say we continue to trade below this downside line, then maybe a correction here back to the downside could be possible. Now, what I'm not excluding here is, for example, if we do correct lower from here and we do move back down and we, let's say, continue to slide alongside this, let me just get rid of this actually. If we continue to slide alongside, or just, alongside this downside line, slightly below it, maybe, just maybe, we could be forming something of a bullish flag. But again, I'm really getting ahead of myself for now. For the downside, I would like to see maybe like a drop somewhere below this level, this area. Let me just put a level here. So somewhere maybe around this territory, this 1.0635. Again, I will reevaluate this this kind of potential downside scenario if we do, let's say, continue to hold below this downside line. So simple as that. NZDUSD, guys, there we go. Look at this. I mean, this is just moving nicely. I talked about this yesterday, if you remember, on Monday as well, and I said to you guys, everybody, keep your eyes on those EMAs, because those were, kind of coinciding, all of them almost, and I said to you that if we do drop below these 3 EMAs, I will go lower, and this is exactly what I mean. So I'm aiming for this upside line here, taken from the low of the 8th of March. If we do reach that, that's going to be really great. From here, maybe we could see a nice rebound back up, and yeah, more buyers could join in. So just kind of keep that in mind. But in general, good spectacular performance. I'm watching this carefully, so let's see if we can reach my target right now. NZDCHF, also beautiful spectacular move here, break the upside line. So I talked about this yesterday. Oh, by the way, this is one of those moments where, you know, we thought that maybe it's an ascending triangle here, but then it broke the lower side of it, and then we look at this sharp sell-off here. So the question is, can we see a rebound at some point? Well, actually, I'm keeping a close eye on the 0.5548, but I'm keeping an eye on it for today. I'm still maybe expecting this one to drift further south, maybe even actually testing something around these lines here, the inside swing low of the 1st of May near the 0.5511. Maybe that could be a nice good target. If I would say if that gets cleared, then yes, further declines are possible, guys. Simple as that. NZDJPY, also, yes, breaking the upside line. This one that I mentioned before, this upside line is taken from the low of the 27th of April. Look, again, although I'm expecting further declines, I'm really curious how this is going to end at the end of the day. Because again, if this somehow retraces back up and stays above this upside line, guys, maybe, you know, we are, let's say, maybe we are just making a false breakout. There we go. I managed to squeeze this one out of myself. Making a false breakout. Maybe that's going to be the case. Again, we'll wait and see. For now, I'm leaning towards the downside as long as we stay below this upside line. USDJPY, there we go, loading up a little bit. I think it's lagging a little bit. Sorry, apologies for that, guys. Honestly, this is just a bit of a technical issue. In the meantime, I have some time to have a drink of tea. So, anyway. Yeah. Anyway, I know how the chart looks, and I'll just try to, you know, talk about it. Basically, we had that nice resistance. We found that nice good resistance. Why is it not coming back? Honestly, come on. There we go. So, what I talked about previously, I talked about this resistance barrier. I said to you yesterday that I'm gonna keep an eye on it, because if that provides good resistance, yeah, maybe, you know, a drift back down could be possible. Maybe we're forming something of a range here. Also, I've drawn this. I said to you that, look, we were testing in the beginning of this week. We were testing the 23.6% retracement on the Fibonacci, which we drew this way here, the short-term one, and we rebounded from it. We pushed back up. I think that it's time to get rid of this territory. I think no longer needed. Let me just get rid of it. I'm going to reuse this highlighted zone. I'm going to highlight this target because this is my, not this one, guys. There we go. So this is my level. This is my ideal scenario here for the upside. This is my target. But for that, I need to see a nice good clearance of this territory right here, the 138.75 zone, approximately around here. We did get a few false breakouts already. Look, the thing that we're forming right now here could be something of a bullish flag. Because we have our pole, we have our little correction here lower. I'm not saying that maybe this, you know, could push straight away to the upside, but maybe at a later stage. But that's only if that is a bullish flag, because again, maybe this is just a little range that we're currently stuck in. So maybe, let's say, if this continues to provide resistance, this 138.75 territory continues to hold, maybe a drift back down could be possible. That's why my downside scenario here is from around this territory, from around that 23.6% retracement on the Fibonacci, which is drawn from the low of the 11th of May to the high of the 18th of May. And if we do drop below that 137.57 territory, which is that at 23.6, then yes, this may open the door towards some lower levels, guys. So just keep that in mind. But while we're going to be stuck in here, in this purple territory, in between 0 and 23.6, I am just observing the price action. Another thing that could support the downside scenario is the fact that, yes, the whole kind of issue with the debt ceiling, and, you know, if indices start declining, then we have an increase in demand for yen. So that's why, yeah, do not exclude any scenario for now on USDJPY. Why? Because on one hand, we had a great rally. Maybe, you know, we're taking a little pause, going to form a range, and then we're going to continue the rally further north. Maybe. That's one of the options. Or maybe we had already quite a decent up move. Maybe we're going to form a double top here and then break the neckline and move back down for a nice little correction. Again, not a bad scenario. Also need to be considered. So that's why I'm saying wait for a confirmation break. Until then, just observe the price action. GBP Aussie. So yeah, look, inflation numbers, UK inflation numbers. Let me just quickly have a look because those came out when I started the video. 8.7. Okay, the forecast was for 8.3. That's what I'm talking about. The headline year-on-year number, the inflation number. So the forecast was 8.3. The number came out at 8.7. And this is the point where everybody's like, oh my God, this is like high and stuff like that. But actually, the previous one was at 10.1. So plus 10.1 was the previous. The current one is 8 plus 8.7. Look at the spike we're getting right now. We're having a strong move here. We found good resistance. And in general, oh my God, this is working perfectly. I talked about this this level here, the 1.8775. I talked about this a lot. And there we go. We cleared it. And my next target got reached, the 1.8926 tick. Now, can we reach the 1.9036 level here, which is near the highest point of April? That's a good question. That's something that I'm going to be keeping a close eye on. If we do clear this barrier, this 1.8926, if we stay above it, then yeah, I'm going further north. For the downside, what I need to see here, now previously I talked about this, I think that it's time to redraw this downside line as well. Oh, by the way, if you remember, I talked a lot about the idea where whenever we have a trend line, for example, we break it, we revisit it from the other side. It sometimes acts as a trampoline, and then we go higher, you know, like in this case. So now what? Can we draw an upside line? Well, the thing is that it seems like we can, because something among these lines, but not something very ideal, but nevertheless, something among these lines. So yeah, we got that rebound and we pushed higher, but the main important thing for me here is that we broke this barrier. So look, if you want to go lower, I think that a drop below this upside line is required. If we get that, then yes, I will go to the downside. GBPNZD, I mean, this is just a spectacular. Look at this move from what, 1.9870, something like that, all the way to 2.02 and counting. I mean, look at this. The next target here could be that highest point of April here. I mean, very good. This upside line needs to go. It has stopped working. But in general, what I said to you previously, that if we do push above the 50-day EMA, I'll go higher. But my target was only up until here, the 2.0150. Well, okay, that's a good result here. We've cleared it. And now I'm going to say this, that as long as we stay above this 2.0150, I'm considering, even if we get a retracement of some sort, I'm still considering the upside. If we start falling back below it, that's where, yes, I will get a little bit more excited for aiming towards the 50-day EMA. EURCHF, guys. EURCHF, beautiful, honestly. Like, I've mentioned this as well in the beginning of this week. Last week, I think I talked about it as well. So I talked about this idea of a possible falling wedge. Now, This scenario, I said to you that, look, we have ourselves an interesting level here, the 0.9706. We had a false breakout, and then we had a breakout, a strong one. We moved lower, but we failed to stay below it. Then the next day, we also tried to test, we tested that level. We broke below it. We failed to stay above it, below it, and then we pushed back up. And we tested actually the lower side of the falling wedge as well. So, and now we're seeing a nice move higher. So what I'm kind of leaning here is that if we are getting this such a reversal here, and we also push above the 0.9723 territory right here, I will get a little bit more excited with the upside, guys, within the pattern. Because don't forget that while we're in this falling wedge, the trend is still to the downside. Although, according to all the TA rules, such patterns tend to break to the upside. We need a confirmation break of the upper side of that falling wedge in order to go higher. Well, we're not there yet, so we still have a chance of moving lower. And that's why I'm going to be very careful and cautious here. For the upside, within the pattern, I will consider this 0.9723 territory. If we clear it, I'll go a little bit to the upside, and then I'll take it from there. If by any chance we start clearing the lower side of this falling wedge pattern, scrap the whole idea, and we could start moving to the downside. EURNZD, another spectacular one. Look at this beauty. I talked about this yesterday in my morning video, guys. I've warned you about this, and I said that if we do drop below this territory, below that 200-day EMA, that's where I'm going to get a little bit more excited. Some of you might said maybe we're forming a descending triangle, but this is another example of where it doesn't work. And yeah, we broke the downside line. I talked about this yesterday. I said that if we break it, my next target is the 100-day EMA, then the 50-day EMA, and then maybe this 1.7525 territory, but I don't know. That was quite a big move, but like a piece of cake for today for the bulls. Now what's next? Well, first things first, I need to get rid of these trend lines. No longer needed, and if they're not needed, just let's get rid of them. Now, another thing that I'm watching right now, and you're probably already going to be following me, is this. Let me just put this on the chart. There we go. Not this, but this right here. Again, will this be a range? Let's wait and see. For now, the thing is that we're testing the upper side of it. Can we go higher? Can we go further north here? Again, another thing here, maybe it's not this 1.7525 level actually. Maybe it's something a little bit higher. For example, around here, this 1.7557. Maybe that's a little bit more accurate. If we clear that and we stay above it, I'm going to go further north, guys. So maybe actually the range, the upper side of the range should extend to something around these lines. So if we do clear this upper side, the 1.7557, and yeah, I'm going to go further north. Another thing to consider, as I've mentioned already before with one of the pairs here, that look, if we're going to get a hold up somewhere around here, maybe we'll drift back down. Maybe we'll start, correcting lower a little bit, and maybe we'll form a possible bullish flag here. Maybe that's going to be like just something for later on. So if, all the bulls missed this idea here, okay, maybe this will come, maybe this will be another opportunity for the bulls, for those who missed it, to go in long here. If we do, let's say, get a hold up here and we start forming something of a bullish flag, we'll get ourselves a little correction here to the downside. And if it's not going to be a significant one, then yes, I will consider it still a move higher. But for the downside, if we start falling back below the 100-day EMA, guys, I am just starting to consider the downside again. EURUSD, beautiful rebound from this territory, 1.0760. I'm keeping a very close eye on it. And yep, if we do clear it, I will go lower. Simple as that. This will confirm a forthcoming lower low and potentially could attract more sellers into the game, but only up until this upside line and that 200-day EMA, which coincides with that upside line taken from the low of the 21st of November. good potential target. For now, that's what I'm going to be aiming for, especially if we do drop and stay below the 1.0760. For the upside, I would like to see maybe a push somewhere above this territory, but I'm not sure. I have to admit that I'm not sure about this. Maybe it will be somewhere around here. Maybe actually I'm going to keep an eye on the 100-day EMA, something like that. But at this point, probably the easier option is to just keep an eye on the downside line. If we clear it, then yes, this may open the door towards some higher levels, guys. So that's it for this session, guys. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, your views, your rockets, everything, guys, your comments. Thank you for that. If you found it useful, I'm really happy. Honestly, this is what I like doing, and I hope you like my videos. Thank you very much for that, guys. I really appreciate it. Here's a massive thank you for you in the chat room, guys. There we go. So yeah, have a beautiful trading day, guys. Stay safe today. I mean, this week could be a bit of a roller coaster ride, so just try to be careful and cautious. Have your stop losses in place, have your risk management in place, and everything will be fine. So long story short, thank you very much, and I'll see you tomorrow, 6 o'clock GMT time. Thank you very much, and bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.